Today is Sunday, March 2nd, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. Since my last update, I did decide to add another 2% of my overall portfolio into Palantir. If we take a look at the year-to-date chart for Palantir, you can see at the beginning of the year, it definitely underperformed. And then once they reported their earnings at the beginning of February, it was pretty much off to the races from there. The share price peaked out on February 18th, and then this green line represents where I sold the following day. This first two is where I reopened the position by putting 2% of my portfolio into it. And then this second level is where I decided to invest another 2%. So right now it makes up 3.88% of my portfolio with a dollar cost average of $87.04. The price that it's at right now is pretty much exactly where it was the last time that it had reported their earnings. Even though currently I'm down a couple of percentage points, I'm totally okay with that because I do believe that it's going to rise again. I don't have any levels set and I don't necessarily plan on investing any more if the share price continues to fall. But as long as no extremely bad news comes out, I do plan on holding it. Disney is not currently in my portfolio, but I did place a buy order for Monday morning, and that's going to put 3% of my overall portfolio into this new position. I'll show the chart next, but I at least wanted to go ahead and show some earning highlights from when they reported on February 5th. Their revenue increased 5% year over year. Their net income rose from 1.91 billion to 2.55 billion. They increased their earnings per share by 44%. Their streaming services, Disney Plus and Hulu, saw an operating income of 293 million, which is a lot better than the $140 million loss the year prior. And then their parks and experiences saw a 28% increase in operating income. So overall, a lot of good stuff, which is why I decided to invest in this new position. If we take a look at the Disney chart, this black line is going to represent where I'm going to open up the new position. This top green line is going to act as a resistance level, and then this lower one is going to act as a support level. We managed to have 4 touches along this support level between last August and last October, and the fact that it never went below it once indicates that it's a pretty strong support level. And then bouncing off of it a 5th time after they reported their most recent earnings is what originally put it on my watch list. And then on Friday, it closed above this resistance level, and since those last earnings, it's up just shy of 3%, so I definitely think it has some more room to run. If Disney does continue to show strength, I'm going to purchase more up at this level, which is a 3.25% increase from where it is right now. And if for some reason it does reverse and go lower, I am planning on adding more to the position if it reaches this level, which would represent a 6.75% loss from where it currently is. Some more reasons that I'm also excited about it is we recently just saw a bullish crossover for the MACD, and we are starting to see an increase in the RSI. Right now it's about 60, and 70 represents an overbought condition. Buying into a position when it's close to the 70 mark for the RSI isn't necessarily always a bad thing. In this situation, to me, that means that there's been an increase in buying activity. So I am definitely excited about this new position and do plan on holding it until at least their next earnings report. For the events this last week, it definitely wasn't good. On Tuesday, the consumer confidence came in low at 98.3 versus the expected 102.3. New home sales and pending home sales both came in short of estimates as well. And then the initial jobless claims was also a little bit higher than what was expected. The one bright spot was that on Friday, the PCE index came in pretty much at estimates, which is the index that's most closely watched by the Federal Reserve to monitor inflation. And then looking ahead to this week, on Wednesday, we're going to have the ADP employment report, Thursday, initial jobless claims, and on Friday, the employment report. So I'm hoping that all of these come out positive, because if not, I foresee a shaky week in the markets. If we take a look at the SPY chart, you'll see that the SPY price and the 5-day moving average are exactly at the same spot. Both of those still are below the 15-day. Fortunately, it was able to bounce off of this support level and not go below it. So the markets are still showing some signs of strength. These are going to be all 13 of my current positions. Right now, Meta, Nvidia, Microsoft, Costco, and Welltower make up my top 5, and those account for 50.26% of my portfolio. Without accounting for the Disney edition tomorrow morning, right now I have 85.46% of my portfolio invested, which means I have 14.54 sitting in cash. I do intend to stay above 10% cash, and after the Disney edition, it's going to put me pretty close to that point. So I think if I want to increase any of my position sizes, I'm going to end up trimming some of my Meta, which right now makes up 14.93%. I don't necessarily have any direct plans to do that, but if I did, that's how I would. Since Wednesday, Pershing Square saw a loss of 0.88%. My portfolio had a gain of 0.13, and the S&P 500 had a loss of 0.01, which brings us year to date. Pershing Square is at a gain of 10.4%. My portfolio is at a gain of 4.71, and the S&P 500 is at a gain of 1.46. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.